Well, good morning. Welcome to Smart 2022 welcome to Start Financially 2022 Financially Smart. My name is John Hamby. I'm with Members Credit Union, and I am so glad that you have joined us this morning, either live or you're watching this as the recording playback. So we're grateful that you are here with us today. We have a couple of special guests with us that I'll introduce as we go along. We have Paula Moreland with us this morning and Victoria Morrow that I will introduce a little bit more in detail in just a few moments. But I hope everybody has had a wonderful 2021 and is looking forward to 2022. A lot of things have been a struggle over the last couple of years, but we're hoping that 2022 is going to be a great financial year all the way around. And so we just want to take just a few minutes and kind of refresh and go over a few things to help us get started into 2022 financially sound and on the right foot. And so that's what today is all about, just to kind of talk about a few things, some that you may already know something about, some that you may not know a little bit about, and to give a space here for you to ask some questions and to get a little more information as well. So again, welcome. We are glad that you are here with us this morning, and let's take a look at what we have for us today. So the first thing that we want to talk about this morning, of course, is one of the most important things is your credit score and your credit report. Year after year after year, more and more fraud is happening, and more identities are being stolen, and things are being opened and affecting your credit score, your credit report. And it's very important that we stay on top of that. And so there is a website called Annualcreditreport.com that you see on your screen, and that website allows you to pull your credit report once a year on all three of the major credit bureaus, Equifax, Experian, and TransUnion, and gives you a chance to look over your credit report. Now, it does not off the bat give you your credit score. I think there are options in there that you can purchase your credit score, but the annual credit report does give you a listing of all of your things that are showing up on your credit report. Now, remember that credit reports, the Equifax, Experian, and TransUnion are three different companies. They are three different reporting agencies, and all three of them use different algorithms within your credit report to be able to pull what they consider your score to be. So not everybody reports to all three. Not everybody reports to just two of them. Some only report to one. So it's very important that you do pull all three of them at some point throughout the year, whether you want to do them all three at the same time or you want to do them scattered out throughout the year, to check and make sure that you pull all three of them. Because by pulling all three of those credit reports, you really are going to get a full sense of what's on your credit from each one of them. And they can differ because, again, not everybody reports to the same bureau, and not all the information is the same across all three of them. So you do want to check all three of them throughout the year to make sure that you do not see anything that is on there that you may want to dispute, or something that you need to get rid of. And if you do need to dispute, once you get into annualcreditreport.com, if there is something that you need to dispute, then it gives you the information on there as well on how to dispute that information. So first thing in being financially smart in 2022, checking on your credit. So go to annualcreditreport.com, check out your credit report, and make sure that everything is in the right place and where everything needs to be on that. The second thing we're going to talk about is savings. I cannot stress enough about how important savings is. And, a lot of times when we talk about savings, a lot of people think, oh, well, I don't have thousands of dollars to just be able to put back over the course of a year. That's okay. We're not talking about always doing $1,000 here and $1,000 there and really building that up. I mean, eventually we want you to get to that point where you do have a couple of thousands. about 3 months worth of living expenses in a savings account. So if something traumatic was to happen, that you would have that, but start small. And one of the ways that I encourage people to start savings is using a chart that you can see here. It's called the 52-week savings plan. And you can basically see here that week 1, it says to deposit $1. Week 2 to deposit $2, and week 3 to deposit $3, so on and so forth. And you can see in that left-hand column, that account balance column, how, week 1 you've got 1, then by the end of week 2 you have 3, by the end of week 3 you have 6, by the end of week 4 you have $10, and it keeps growing. And at the end of the year you've got $1,378. Now, I like to do this savings plan every year, but I do it a little differently. I start at the bottom and work my way back, because we have Thanksgiving, we have Christmas, some of these by the end of, say from week 45 to 52, we're shopping for Christmas, we're doing a lot of things. And so I start off, since taxes come back at the beginning of the year, I just got Christmas money typically. A lot of things happen that I start off the very first week of January with $52, and then $51, and then $50.49. So I do it backwards than what this says, because I want to know when I get down to those last, 8 weeks of the year, I'm putting in $8, $7, $6, $5. And this is a great way to, before you even know it, this time next year, you've got, almost $1,400 in a savings account. And what a great way to just start things off. So as you can see, saving can be very, very easy simply by putting, $1 or $2 a week, and increasing that by just $1 per week, or decreasing it if you go backwards, by $1, each week, can really add up very quickly in a year's time. Now, it's not 3 months of savings, but for someone who needs to establish their savings and get started with savings, it's a great tool to use. So, we definitely want to talk about savings, putting money back in a savings account, so that you do have that for emergencies. And if we've all looked at the last year or two, rather, since the beginning of 2022, when the COVID pandemic has hit, we all understand just how important a savings plan really can be. We never know when we're going to get sick and not be able to go to work. We never know when, our job is going to downsize and we're going to need to rely on some of that savings. So it's very important that we look into savings as well. So as we continue to look into savings, I would like to introduce you to Paula Moreland. Paula Moreland is a financial advisor with Members Financial Services that is here with Members Credit Union. And Paula does a wonderful job with our membership, and has a lot of products and services that can help save money as well as prepare us for future. So Paula, welcome.
Morning, everyone, or I guess afternoon now. What great advice, John, that you just gave. Savings is so important. So what do financial advisors do? Well, we help you reach your financial goals. So let's fast forward a couple of years. You've listened to John, you've built up that savings account and even paid off some debt. So what do we do now? Well, what about retirement planning, providing for a child's education, income during those retirement years, legacy planning? That's where I can help. Whether you're looking for help with a specific goal or looking to design a comprehensive investment planning strategy, we're the resource you can look to for all of your financial services needs. And so before I go, I do want to leave you with a tip. Take a moment and think about your 401k. If your company matches, do you know how much they match? Are you investing enough to get the full match? If not, then you're just giving away free money. So one of the first steps in retirement planning, and even with just your savings, is taking full advantage of your 401k. So just take a look. If you don't know what your match is, contact your human resources to find out what their percentage is that they do match. And just make sure, if you can't do the full match, just each year, just increase it. by little until you do get that full match. So I'll turn it back over to John.
Yeah, that's great, Paula. I was, I was just sitting here thinking when you were talking about your 401k. I know what our company matches, and each year as we're moving along, I take it 1% at a time. And so every January, I increase my 401k contributions by 1%, so that I am, now past that, but using that whole the whole match that they give. So
it adds up quickly.
It really does. It really does. And, Paula, I think in some cases, even though that you have a 401k through your job, once you're at that match, a lot of times, Paula, I think, if my understanding, because we've had these conversations in the past, that we can actually work with you on anything past that. And sometimes, depending on the market and how aggressive and things you want to be, can actually do a little bit better with some other financial or some other retirement tips that you may have, and some other ways of investing some of that above and beyond that 401k, right?
Exactly. Like I can help with, some people would like to start a Roth IRA, because Roth IRAs down the road can give you that tax-free income in retirement years. And also saving for a child's education. That can be important. So yeah, I help with doing, like, helping to build that comprehensive financial plan, and then in retirement, income needs. And a lot of people also, and I'll bring this up as well, when you leave a job, whether it's through retirement, or let's say you lost a job, or you just got a better job somewhere else and you're just moving jobs, a lot of times one of the biggest mistakes I see people make is cashing out their 401ks.
Oh, yeah.
They don't know that there are other options, and that's where I can come in, because cashing out a 401k, there could be tax consequences, there could be penalties, and a lot of times they don't seek the advice on what to do with that 401k. So that's where I can come in and help as well.
Yeah. So, I mean, if you're seeing this, again, if you're watching this live or you're watching this on the recording through our social media and other platforms, Paula's information is right there on the screen with her phone number. Give her a call, set up an appointment, and have a time that you guys can sit down and talk. If, it may not be that you're in a situation where maybe you can use her services at this particular moment, but she can guide you as to where you need to be, or where you can, or in the future, what she can do for you. Or it may be that you are in a situation that she may be able to help you with some other financial tips and ways to invest, and ways to do some things to help you out for the future that you didn't even realize that you were able to do right now in this moment. So I encourage you, use the phone number and give Paula a call, and let's see what she can do. She is a great partner with us here at Members Credit Union, has been for many, many years. And we all love Paula and her assistant Taylor to death, and they do a great job for all of our members. Never had a complaint come out of anybody from Paula or Taylor. So thank you, Paula.
Thanks, John.
Being there. Yeah, appreciate it. So we also have on our call this morning, Victoria Morrow. She is one of our partner agencies, which is the Family Security Plan. And Victoria does a great job working with our membership on supplemental insurance. And so Victoria, welcome.
Hi, John. Thank you for having me.
Yeah, I'm so glad that you could join us this morning. So tell us a little bit about Family Security Plan, what you do, what you have to offer, and how this fits into being financially smart in 2022.
Sure. And it really does play directly with everything that you're talking about with savings and Paula talking about retirement. Our plans supplement to help protect you from losing any of that savings that you may put into place. If something were to happen to you tragically and you were ill or disabled, the plans we have in place will help make sure that you're not having to pull from all that planning that you've put into place. We never can really tell when something something like that could happen. And if you have a lump sum available to you in a critical illness plan or disability plan, you're protecting all that savings that you just put into place, because you're not having to pull from that because of a tragedy that's happened to you or your family. And so our plans definitely work hand in hand with all of what you're talking about. And to go in even further in planning for your final expenses for whole life, making sure that, you have a little bit put aside, that if something tragedy happens to you, your family, you don't want them to have to pull from whatever legacy they've put into place in order to prepare for your final expenses. So all of our plans definitely help with supporting your financial security.
Yeah, I mean, and I mean, I have seen the plans. I have talked with people, week after week, year after year, that, I mean, we have been a partner with Family Security Plan for almost 15 years now here at the credit union. And over the course of 15 years, I have heard those stories of, I was injured or I got sick and I am, now I'm not able to work. And had it not been for these particular plans, these insurance plans that I had through Family Security Plan, we would have survived. We would have, gone through every bit of our savings, and just, we don't know what we have done because they were prepared and they had taken that step to secure themselves in for the future. And both
Exactly.
you and Paula both mentioned legacy planning and estate planning, and it is so important. I was just having this conversation a couple of months ago with my parents, and it kind of made them a little uncomfortable. But I was like, I'm not planning. I don't want you to go anywhere, but
Right.
we're something at some point is going to happen to all of us, right? We're all
Yeah,
going to,
unfortunately, it's inevitable.
right. And so it's what do we do, and what do we leave for our families to take care of? Not everybody has the ability to leave large amounts of property and land and bank accounts to everybody. And so one of the easiest ways of making sure that things are settled, whether you're talking with Victoria or you're talking with Paula or you're talking with both of them, is that estate planning and that legacy planning to know exactly what their last wishes are, where they want to be, having that whole life insurance, having those insurance policies so that things like that don't happen, that we're not having to come up with all of these things in times of crisis and in times of grief, that everything is already taken care of. And to me, there's no better gift, talking about the Christmas season and coming right out of that into this new year, there's no better gift than to have those things planned out.
Yeah.
And Family Security Plan, and as well as Paula, and her estate planning, just has a great variety of everything, that you can pick and choose from to get there. And Victoria, your policies really are not that expensive. I mean, we're really
No, they're not.
talking, pennies on the dollar of the day, right?
Yeah. Yeah. I mean, you can do a policy, especially if you do it early enough. And that's what we do try to stress too. Don't wait, because what you have at work is great, but these are going to supplement and you can take them with you no matter whether you retire or if
Right.
you change jobs. And it can be a minimal fee. We definitely want to work within your budget. We don't want to overinsure you. We're not, we're here to help. We definitely want to make sure that you're doing what's best for you and your family. We don't want to have you in, turmoil to pay for these
Right.
plans. We definitely are going to sit and make sure it's going to be within your budget.
Yeah, and guys, Victoria really, really does that. I mean, she honestly cares about the people that she's talking to. And that really comes down from the company that she works for, Family Security Plan. I have been to their offices. I have met the owners of the company myself. It is a family-owned, family-run company, and they really do care. They only work with credit unions because they care about the philosophy, they care about the people, they really do care about those families, and they just want to make sure that you're taken care of. And it trickles all the way down to their field agents that are here on the ground. Victoria, and you may walk into one of our branches across the state of North Carolina at any time and see Victoria sitting right there in our lobby. So she's not just a figmentation out here in cyber world, only on webinars. She is a real person out here. Paula is a real person that is in our branches. She works right here in our corporate office in Winston-Salem, and will travel to any of our branches to meet with you. And so these are real people that really care and have a desire to see our membership grow and be financially sound in every year. But we're moving towards 2022, so that's our goal here. So thank you, Victoria, for
Thank you for
being
having
a
me.
part of. Yeah, thank you for being a part of our webinar today. So that's kind of what we had. So I want to open it up for you guys. Maybe there's something we didn't cover today that you have a question on that I can try to answer, or Paula can jump in, Victoria can jump in. If you've got that, make sure you've got the chat feature there that you can use. You can also unmute yourself and ask us a question. So let's open this space up right now for questions. Or Paula and Victoria, if you have something else that you haven't mentioned that you want to mention, feel free to unmute yourself and share that as well.
I don't think I mentioned our accident plan because I was so focused on, security and financial, but the accident plan is another supplement program, kind of like, AFLAC, I guess, is what we do compare it to. Very similar, where if you're in an accident or you're injured and you have to have treatment, we'll pay you a lump sum. So again, it is helping with your financial situation at that point, and it's any accident, whether it's at home or in a car, 24/7, this coverage is available. You send in a claim and you're paid according to whatever treatment you received. It goes directly to you. So again, another way to help you in amidst of a tragedy,
Right.
and accident coverage is available as well. I don't think I mentioned that before.
Yeah, that's great. Absolutely. Thank you, Victoria. Anybody else have a question this morning?
Everybody's still getting over the holiday.
I know.
Hi, my name is Takia Currents. I am a member, and I have my husband with me, and we've been
Wonderful.
listening to the webinar, and we really do appreciate all of the information that has been provided. I've been taking notes,
Oh, good.
and I can't wait to get started next year, getting my financial freedom and success and security. However, my husband does have a question, so I just wanted to introduce myself just in case you see the name says my name, but then you hear my
Sure.
husband. Okay. One
Awesome.
moment.
Yes.
Hey, good evening. So my question was, at what point, once we've, like we may have access to some 401k money, or in another time it might be, you might have inherited a lump sum, but at what point can we feel safe about, okay, this time it's all right to buy something, or, use some of the money that we've been saving and working hard for? How do we start to discern those times where it is all right to go ahead and make a purchase?
Paula, I'm going to throw that over to you.
Yeah, tag, I'm it, right?
That's it. When he said 401k, I knew I was done. That was Paula there.
Victoria?
No, you go right ahead.
Nice to meet you guys. So as far as when to start using, I guess you mean as far as 401k money, when it's good to start using it. Am I correct on that? Is that your question?
Yes.
Okay. There's a lot of factors that play into that. So I can't just give you one straight answer, because for one, it depends on your age. So if you're below a certain age, then if you tap into that 401k, then you're going to be penalized. And it also, I guess, depends on what expenses you're looking at. Like if you're looking at paying off a house, that may not be the wisest decision, because you're taking money that's meant for growth and you're putting it on, you're taking all this money and you're putting it onto something that is debt. where it could stay in the account to grow. So there's a lot of different factors, and that's where just sitting down and meeting with me as an advisor, we'll go through all of that, because everybody's story is different. For some people, it may be appropriate to buy this or to pay off a debt. It just all depends on your circumstances. And also looking at income, because that is one of the things I love to focus on when I do retirement planning, is focusing on that income. Because, you know, you save and you save and you save, and you want to enjoy this money in retirement. You want to be able to go and travel, or maybe buy a big, like an RV, so that, you know, you want to fulfill those goals and those dreams in retirement. And that's where I come in. It's about managing that 401k, you know, maybe using it as income. Some people will use the 401k as a monthly income to maybe help finance those things like the RVs or a new car or something like that. So again, for each person, it's different. And that's one of the things I look at. I go through your goals, your objectives, how much you've saved. Do you have enough funds for emergencies? Things like that. So don't know. I mean, did I answer your question with that, or at least give you some guidance there?
Yes, you did. Thank you. That was very good. I appreciate
Good.
that.
Yeah, and Paula, I heard in his question too, you know, and I think we focused on 401k, but he also mentioned inheritance as well.
Right.
So it really
Yes.
depends on if you're looking at, you've got a large lump sum, or even if it's not large, but you've got some type of lump sum of money that you're, you know, doing something with. Depending on what it is and where it came from has a lot to play. You talked about the 401k. There's age limits with
Right.
penalties if you're under that. Inheritance are a little different.
They are, because
Depends on the estate, how you got it, how much it is, where it's supposed to go. I mean, there's, you know,
right.
so you may be able to, there may be a smarter time to use that type of money than 401k, but again, it's all individualized. It's all going to depend on the estate. It's all going to depend on how you got it, how it was transferred to you. Is there inheritance tax on it? Is there not inheritance taxes? You know, there's a whole lot of things that are wrapped up in that as well. So again,
Exactly.
to your point, sitting down with you and figuring out exactly where it's coming from, what it is, where it's going, and what you want to use it for can be, you know, is all part of that process.
And I meet with people every single day, and each person's story is different. I don't think I've designed, or every plan, or no, there's been no plan exactly the same for each person. So each person is different. Each person has different goals. So again, that's just where I come in, and I guide, give guidance, give advice. Because like you said, you know, if they have an inheritance, say from life insurance, or they inherited an IRA from a family member. I mean, each of those are different scenarios and
Right.
different tax consequences.
Paula, I did have another question for you
Yeah.
about the financial planning service. Is this something that's offered through the bank, or is it a paid service that I would have to pay
Oh.
for?
That's a great question.
Great question. Yeah. So I actually work with CUNA Mutual. We partner with the credit union to offer these services. To meet with me, there's no cost. Now, if you decide to go with certain products or services, there may be cost with that, but just to sit down, do the plan, get the guidance, there's no fee for that.
And I would just come to you where you're located?
Yes, or we can even do like a meeting, like a WebEx.
Okay.
So there's different, you don't have to come to the branch. I can do the WebEx. We can start off by a phone call. And if you're at one of the other branches, I do sometimes travel to the other branches as well.
Okay. That's great to know. Thank you so much for
You're
this
welcome.
information.
Awesome. Thank you. Any other questions?
Yeah, I had a question on the coming year. How do you feel like inflation is going to impact us in these areas?
Well, that is actually something I can't talk about on a webinar. But that is something that if anyone would like to call me about, I don't mind giving advice on that as well.
Yeah, I think, you know,
I can't give investment advice over
yeah,
a webinar.
you know, and I think It really depends. I can say this because I'm not a broker, so I can speak a little bit. Just, and again, this is just on what I see and what some opinions of some that are smarter than I am. I don't think that it's going to be as bad as what people think they're going to be. Interest rates are going to go up just a little bit across the board. They're not going to go up much because there's too many factors in there that we just really can't afford for them to go up. The federal government, the Fed itself cannot afford for it to go up. So the interest rates, we're going to see them creep up a little bit for loans and houses, mortgages, auto loans, things like that. The cost of inflation, I think, is a very temporary thing. I think we're going to see things jump up until we get this housing or this housing market back into more of a neutral place, as well as the job market. When we get people back to work and get these companies where they're searching right now for employees, we get them fully staffed again, things are going to level back out. I don't see inflation and or interest rates or anything like that going skyrocketing throughout this next year. And the people that I've talked with on several different conversations, I don't see that happening much. I think we'll see a little bit of it, but I think my opinion is it's going to be a temporary thing. I don't think we're going to see much of a huge long-term effect on that. That's again just my opinion from what I've seen and what I've talked to. So, any other questions this morning? All right. Well, it looks like everybody is still muted. So again, thank you so much to Paula and Victoria for being our guests today. We hope that you find the information that was given out today, very, very successful, will be very successful for you in becoming financially sound in the coming year. Just check out those credit reports, work on those savings, make sure that you have the insurance that you need, as well as the planning for future, for your retirement accounts and estate planning, things like that. We can give those to you. So if you have any questions, please reach out to us and we'll be happy to get you more information on that. So for Paula and Victoria, we want to say Happy New Year to you. Hope that you have a safe new year. And thank you so much for being a part of today's webinar. We'll see you later. Until next time.
Thank you.